Hi, welcome today. We have a wonderful speaker with us today. Robin has joined us from the Arizona Central Credit Union to talk to us a little bit about understanding credit. She's given a few talks for us in the Wellness Program already, which can be found on our website, and we're happy to have Robin here with us today. Thank you, Robin.
Great, thanks, Katie, and thanks to everybody who takes part in this. Certainly appreciate the opportunity, and any further questions beyond this, both branches in Flagstaff, both at Woodlands and West Street, are available to help you. They know we are doing these webinars and are there to answer any questions, set up memberships, anything along that line. All of you are, as employees, are eligible to join the credit union. So you just merely go into a branch and let them know the entity you work for, and it's in our system. So with that, we have a variety of these seminars and topics such as building basic budgets and savings, and this one is understanding credit. Can you afford it, and how will you pay? So basically, this seminar is geared toward individuals and families who want to build a solid credit history. You might be interested in viewing this seminar because you're just starting out, maybe in your financial life or on your own, maybe a college graduate or a high school graduate. Or you may be here because you experienced some kind of difficulty with credit and you want to start over and rebuild. Some of you may simply be here because you want to stay on track with things in the world that are becoming increasingly more complex from a financial standpoint, particularly in light of recent economic fluctuations. So no matter what your reason, we just thank you for being here, and this seminar can help you get started to building a strong credit history. But from here, the rest is going to be up to you. We're going to explain several things you can do and tools you can use to build that solid foundation. But definitely, you know, the rewards you find with it are so worth it. Individuals with good credit and good credit histories benefit in so many ways, and we're going to go through those benefits throughout this seminar. So this objective sheet just tells you a little bit about what we're going to cover: understanding credit, things like the meanings and types, pros and cons, how qualifying for credit, what lenders might consider, reporting and rating, establishing credit and maintaining good credit, managing credit, and we'll cover credit cards and loans, and handling debt problems. So we'll talk a little bit about the dangers of excessive debt and how to avoid excessive debt. There are handouts involved with this, and I know Katie's probably going to put copies available for you to access those. This is one worksheet on your attitude about credit. So it's basically just a simple survey. It's going to give you an idea how ready you are to talk about credit. And again, really just covering your attitude. Spend a few minutes with it. Go over it with your household or family members. There's no right or wrong answers. And hopefully it's going to leave you with tools to make wise credit decisions. Your attitude in managing your use of credit is going to determine how valuable of a tool it can be for you. So think of a way you actually define what credit is, and kind of write down your notes and thoughts about it. And so basically, here is our working definition of credit. Credit is borrowed money that you can use to purchase goods and services when you need them. You can get credit from a credit grantor whom you agree to pay back the amount you spend, plus applicable finance charges at an agreed upon time. So hopefully we can all agree that this is a good definition. I'm sure you might have other thoughts about it on your own. But we're going to talk about the 4 main categories of credit available to consumers. So we'll start with charge cards. While they often look like revolving credit cards and are used in the same way, charge accounts differ in that you must pay the total balance every month. So when you go to revolving credit, with revolving credit you are given a maximum credit limit, and you can make charges up to that credit limit. So each month you carry a balance or revolve the debt and make a payment. And most credit cards are going to be a form of this revolving credit. From there, installment credit. A creditor loans you a specific amount of money, and you agree to repay the money and interest in regular installments of a fixed amount over a set amount of time. And something like your car loans and your mortgages are two good examples of that installment credit. Now, service credit, service contracts, your agreements with service providers are all credit agreements and arrangements. So you receive electricity, cellular phone service, gym membership, and etc. with the agreement that you're going to pay for them each month. So not all service accounts are reported on your credit history. So knowing the types of credit is certainly important because it gives you the opportunity to see that credit comes in many forms. But again, the question is, excuse me, how are you going to handle it? So that is going to send us to another survey on how you handle credit. And no survey is perfect, but this one's going to give you a good idea of where you fall with your credit ready skills. So again, I encourage you to go through these attachments that I'm sure Katie will provide for you. They're really good basic worksheets, not only for yourself, but again, to share with your household. So the advantages and disadvantages, or the pros and cons of credit. So the advantages, certainly it's convenient. It has immediate purchasing power. There's no need for cash, and your bills can be consolidated. Now, the disadvantages, of course, are it's a loan, and the interest rate may go up. It may include additional fees. It can be very easy to overspend, and it can certainly promote impulse buying. So you've heard many people, certainly some even experts, warn about using credit in this day and age, and understanding the smart way to use credit is critical. So we'll begin and examine how establishing credit and creating a positive credit history will be so very important. And here are some reasons why handling your credit well is going to be important. It's going to have an impact on many areas of your everyday life. When you buy a car, so this is a common purchase. Many Americans take out loans when they buy a vehicle. Car loans are much smaller than, say, house loans, so they're typically easier to get with a poor credit score. However, a poor credit score will only qualify you for high interest rates and a larger down payment on that vehicle. So this can mean you pay thousands more for the same car compared to someone with good credit. When buying insurance, after you buy that new car, or maybe your new home, or rent an apartment, you're going to need insurance. So almost all insurance companies now factor your credit score when calculating your premium payments. So good credit is going to save you money on your auto, home, and or your renter's insurance. When you start a business, if you're thinking about starting a business and need a business loan, your credit score and your history are going to factor into that eligibility for small business financing. Regardless of whether you're starting a business from scratch or trying to get the funds to expand the business, your individual credit score is going to affect your ability to get a loan for that business. Getting a job. Many employers now run credit checks on prospective employees prior to hiring them. So this is especially common in the government and financial sectors. A negative score or negative history could potentially keep you from getting hired. Getting lower interest rates. While a good credit score is an important factor in obtaining any type of financial assistance, many credit unions are still willing to give loans to individuals with poor credit. So if your credit is damaged, you're going to have to provide more documentation for your loan. You will most likely be hit with a higher interest rate as well. So this is how financial institutions outweigh the risk of giving you money. So you're going to always want to remember, if you want better interest rates to save yourself money in the long run, keep your credit score high and work to repair your credit score by making house and car payments on time, paying off loans before the end of the loan period, and paying off your credit card in full each month. I know that sometimes can certainly be tricky. At least pay the minimum, if not a little more. And what you want to do certainly with credit card balances is you want to have, to help your score, less than half of the full balance of the card paid off. So who needs to bill good credit? There's some groups here: recent immigrants, women, high school grads, college students, young adults, and anyone needing to, quote unquote, get back on track. It lists several kinds of individuals who need to build good credit, and the fact is that all of us need to build a really good, solid foundation and maintain it through our financial lives. And obviously the sooner the better. Don't wait until you need credit to put your financial ducks in a row. So many older women, for example, are going to find out after their husband's death that all their credit history was in his name. And it doesn't matter that during the marriage they had a mortgage, several loans and credit cards, and a squeaky clean bill payment history. If the woman's name was not listed as the primary account holder on any of those accounts that we just listed, she'll probably have a really difficult time getting a small personal loan or a credit card in her name. Another scenario might be that the husband has bad credit. So the wife was not listed as a joiner on the account. She wouldn't be liable. However, the creditors may seek repayment from the estate, and the surviving spouse is usually liable for debts in community property states. So the lesson basically here is to get a credit card or get a credit early in your financial life, use it responsibly, pay all your bills on time, and build that solid foundation over time and keep it and maintain it. And that way you'll be able to get credit at a competitive rate when you need it the most. So credit reporting agencies, it's a company that collects information about where you live and work, how you pay your bills, whether or not you've been sued, arrested, or filed for bankruptcy. All of this information is combined together in a credit report. And a CRA will then sell your credit report to creditors, employers, insurers, and others. And these companies will use these reports to make decisions about extending credit, jobs, and insurance policies to you. So you're entitled to order every 12 months a free copy of your credit report from each of the major credit reporting agencies, Equifax, Experian, and TransUnion, through, and it's here on the slide, annualcreditreport.com. So this website is the only one that is government authorized to provide you with free copies of your credit report. Now here's a tip for you. Consider staggering requests throughout the year. So for example, order a free report from Experian in January. Order a free report from Equifax in May. And then order a free report from TransUnion in September. And next year, start all over with a free report from Experian. That way you're going to keep tabs on what everybody is reporting for you, and you get them free because you've staggered them within that 12 months. You can also contact the credit agencies directly if you need to dispute information in your report, maybe place a fraud alert or security freeze on your credit file, or if you have any other questions. So what is in a credit report? One of the most important financial documents is your credit report, which is a record of your bill paying history. So what's in it? Identifying information includes your name, your social security number, your date of birth, and your address. What it does not contain: race, religion, or political preference. Job history or employment history, creditors, your payment history, and legal actions such as bankruptcies, judgments, liens, and lawsuits are also in a credit report. So note that positive information could stay on your credit report forever. Negative, yet accurate information could stay on your credit report for up to 7 years or 10 years in the case of Chapter 7 bankruptcy. If you are applying for a car loan or mortgage, several credit report requests from auto dealers or lenders within a short period of time are considered only one inquiry. You won't be penalized for shopping around for the best loan deal. Inquiries you don't initiate, such as pre-approved credit offers, will appear on the credit report that you order, but they won't be on the credit reports that potential lenders view and therefore won't affect your credit score. And not all credit reports look alike, but they all contain the same type of information listed on this slide. So always check the info in your credit report for accuracy, including personal information such as your Social Security number, because numbers can be transposed. And checking your own credit report is not going to lower your score. So again, you want to stay in control of your own finances and your own credit history, so you do want to go in and make sure that you check the information in your credit report for accuracy. So what about errors? When you are examining your credit report, it's not uncommon to find errors or mistakes, and most are probably easily corrected, but will require a letter of dispute from you. And a simple phone call probably isn't going to be enough. You're going to probably want to put that, obviously, in a letter. You'll see here it says write to a credit bureau. Bureau has 30 days to investigate, notify you of results, and delete inaccuracies. And if you disagree, then you'd write a dispute statement or reason for excuse explanation for your file. So have you ever wondered how stores can provide almost instantaneous credit approval or denials on site? Well, your FICO score helps the merchant decide if you are creditworthy. Fair Isaac and Company developed their scoring system in 1989, and the score range is between 300 and 850. So the higher, the better. FICO scores are calculated from many different pieces of credit data in your credit report. This data is grouped into 5 categories as outlined on the graph. The percentages in the chart reflect how important each of the categories is in determining how your FICO scores are calculated. Let's see, payment history down there at 35%. Do you pay your bills on time? Amount owed to creditors at 30%. Do you owe a lot of money to a lot of people? Length of credit history at 15%. How established is your credit history? New credit at 10%. Are you increasing your debt obligations with new credit? Types of credit currently in use, which is the 10% credit mix. Do you have a quote-unquote healthy mix? So know what affects your credit score so you can then take steps to improve it. For example, if you paid some bills late, know that they can negatively affect your score. So you may want to mail those bills a few days earlier, pay them online, or set up an auto pay for those to be paid directly from your checking account. So remember also that having no credit history at all could be just as bad as having a poor bill paying history. You want to establish credit in your name and then pay all the bills on time. And what's a healthy mix? Well, that may include a mortgage, maybe a credit card or two, a personal loan such as a car loan, and perhaps a retail card. Your FICO scores consider both positive and negative information in your credit reports. Late payments will lower your FICO scores, but establishing or reestablishing a good track record of making payments on time will raise that score. Your credit score is a number that represents your credit worthiness. That is how likely you are to repay the loan. So the bottom line is the higher your score, the better. And that number changes over time depending on your payment history. And for more information about credit scores, you're going to want to go to a site, myfico.com, myfico.com. You can order your standard FICO score for $29.95 per month, and your free credit reports do not provide your FICO score. So those that we talked about earlier that you can do, that you get the 3 free over the course of a year, are not going to give you your FICO score. You're going to find that, start with myfico.com. Now, with that, FICO isn't the only credit score in town. A different scoring system was developed by the 3 major credit bureaus in March of '06, and the Vantage score is intended to make credit scores easier to understand. And it kind of uses a different numbering system than FICO, and it's based on the standard grades A to F. So A being 901 to 990, and B is 801 to 900. C would be 701 to 800. D is 601 to 700, and E is 501 to 600. So here, how do you rank with your credit score? Here's kind of a recent breakdown of where Americans fall at the different FICO levels. 13% of the population is going to fall between 800 and 850 at the top, and at the bottom, about 500 to 549. It's about 5% of the population. So, you know, the bulk of everyone is sitting at 27% from 750 to 799. So it's kind of where is all of this ranking if you happen to know your credit score or your FICO score at this point in time. So what if you are part of the following groups that don't have much credit history? You know, the FICO expansion score considers your financial institution, payday lenders, rent-to-own stores, and companies that monitor consumers who regularly bounce checks. The expansion score also helps you gain faster access to traditional credit products. So is FICO the only company to score credit worthiness? Some new scoring companies may look at payment history on utility and cell phone bills. Information like address history, that's certainly a part of the public record. And the new score, obviously, though, is still in a pilot phase. But they're certainly out there trying to provide an equivalent credit score to the FICOs for people without a lot of credit history. So those are some of the various things that they will look at. So who can look at your credit score? Many understand that establishing and maintaining a good credit report, score, and history is important when a person is looking for a loan or maybe a new credit card. What many don't realize is that your credit is examined by and used for a lot of other things. So here are several lenders, landlords, insurance companies, potential employers. I mean, we covered this briefly as we started. But can you think of any other times when your credit history might have been used? Again, think of landlords when you're renting for apartments, or potential employers, as we talked about, certainly. Oops. So how do you establish credit? Getting your first line of credit can sometimes be challenging. So if you don't have a credit history or if you filed for bankruptcy in the past, credit grantors may be reluctant to extend you credit. Start small and build up. Something like a local department store or a bank credit card is a good first step. I know at Arizona Central Credit Union we have a secured Visa. So that's certainly something to ask one of our branches about. That's it's tied to a savings account, and then you slowly build credit from there. Before you apply, ask the credit grantor if it regularly reports your bill paying history to a credit reporting company, which is going to help you establish a history of responsible credit use. So start small and build up, but you do want to ask and make sure that that credit grantor reports to the bill paying history to a credit reporting company, so you're not just taking on something that's not going to get reported, therefore not going to help you. You could potentially get a cosigner. You can ask a parent or a family member or a friend with an established history of good credit to cosign a loan or a credit card application for you. And then you want to make sure, obviously, you pay as agreed since you're putting your cosigner's good credit at risk while doing that. And again, apply maybe for a secured credit card. To obtain that, you open and maintain a savings account as security for your line of credit, which is a percentage of your deposit. So what else do creditors consider? These are the 3 C's of credit: character, capital, and capacity. It's important to understand how someone becomes creditworthy. So character refers to how a person has handled past debt obligations. From the credit history and personal background, honesty and reliability of the borrower to pay credit debts is determined there. Capacity This is going to refer to how much debt a borrower can comfortably handle. Income streams are analyzed and any legal obligations are looked into which could interfere in repayment. And then capital refers to current available assets of the borrower, such as, say, real estate, savings, or investments that could be used to repay debt if income should become unavailable. And again, we've got another handout for that, the 3 C's of credit, that gives you a worksheet that you can try and match up and understand that better. What if you're denied credit? What's your next step supposed to be? Well, when you're denied credit, you're entitled to find out what credit bureau was used to evaluate your credit worthiness. So then you can contact that credit bureau and demand a free copy of your credit report. So if you're ever denied credit, it's your right to receive a free copy of your report. And this is in addition to the free credit report you can request through annualcreditreport.com each year. Dear Credit Bureau, I just had my credit run for a credit card and was denied. The lender said Experian was used to check my credit, and am I entitled to a copy of this credit report? How do I get this? So you definitely want to be able to reach back out to them and say, I am entitled to a report. How do you maintain good credit? Since your credit report acts as your financial references when you apply for any new credit, the only way to maintain a good credit history is to use it wisely. You want to follow these 10 tried and true tips. Create a spending plan, obviously, and live within it. And I know that you can go back to a webinar we did on building a basic budget and spending plan and go through that seminar if you need worksheets and information on that. And either of our 2 branches can certainly sit down with you as well. Provide complete, accurate, and consistent ID on all of your applications, because again, you want to set up your credit history correctly from the beginning, and you want to make sure that it ensures your new accounts are going to be matched to the correct report so that it minimizes the chance that your credit file is going to be incomplete or incorrect. Pay your bills on time and all of the time. Late payments, called delinquencies, negatively affect your ability to get credit because they indicate a stronger likelihood that you will make late payments again or in the future or be unable to pay your debts in the future. So have some credit, but not too much. You know, again, having no credit history is almost as bad as having a negative credit history. And you need only just a few accounts reported to the credit reporting companies to demonstrate that you have good credit management. And as we said, have a mixture of credit types, so it's good to have a history of repaying an installment loan, but a revolving account demonstrates more clearly that you can responsibly manage that credit. You want to keep credit card balances low. Keeping your balances low compared with the credit limit shows that you aren't tempted to charge more than you can pay. By charging a small amount on at least one card and paying that balance on time, you're going to show that you can handle larger amounts of available credit. And use caution when you close accounts. Closing an account isn't always a good thing. It can result in an increase to your balance to limit ratio, making you appear to be an increased credit risk. Demonstrate stability. Some creditors consider your length of employment, your length of residence, whether you own or rent, or if you have any savings in making credit decisions. And contact lenders if you fall behind on payments. Many lenders will work with you to set up different payment schedules or interest rates. Now, managing credit. We've covered the basics, so now we're going to look at how to maintain it, and let's look at how we need to manage it. Because for most people, the 2 main uses of credit will be through credit cards and loans. And how can we make the best choices to keep us on a good financial path? So here's some advice. What to look for when you're applying for your first credit card. You know, if you're older than 21 and gainfully employed, you may believe you are prepared to apply for your first credit card, but picking it out can seem overwhelming at first, basically due to the sheer number of choices that are out there. But as long as you know what to look for, picking out the best credit card for you is going to be quick and easy. So here's what you should be looking for with your first credit card or with any of them. You know, certainly low interest rates. Your APR represents the interest rate you'll be charged if you carry a balance from month to month. So if you pay your balance off in full every month, your credit card interest rate is not going to matter, but it's always better to try and keep it as low as possible. Card insurers, most of them will advertise their interest rate in the form of values such as, say, 11% to 20%. And since if you are a first-time card holder, you're typically going to find yourself on that upper end of the spectrum. So you really need to compare interest rates accordingly. You want to look for no annual fee because you shouldn't have to pay for a fee just to have a piece of plastic in your wallet, especially when you're considering that you're still under determined credit rating maybe doesn't qualify you for any particularly good bonuses and rewards. So beware the credit card companies that claim to have no annual fees. They actually might. They just may not kick in that first year. So you always want to read the fine print before signing up, especially about an annual fee. Rewards programs. It's going to be used, the credit card rewards like cashbacks and redeemable bonus points. Sometimes they were reserved only for consumers who qualified for high-limit cards. So these days, the reward systems are pretty much the norm for most credit cards, so there's no reason to sit on a bench for it just because you haven't had a card in your name yet or in a while. Certainly for young adults, credit cards with decent rewards are out there from certainly many credit unions as well as ours. Reasonable limits, although you can't expect the spending limit on your first card to be, an incredibly high limit, it should still be high enough to remain practical. And if you're financially independent and you can support yourself, you're probably going to want to spend more than $500 a month on the card in order to cover all of your expenses and be able to pay that back. So what to look for in a credit card? Here's kind of a visual, and you want to look at the highlighted areas. You'll pay a higher APR for cash advances than you would for purchases, so you want to watch for that. Use the APR to help you compare the cost of different credit cards. Again, you'll see that percent range. All of the fees down here under annual fees are on top of any interest you might pay, so you want to be particularly aware of those, and annual fees that occur whether you use the card or not. This basically just covers the Credit Card Accountability, Responsibility, and Disclosure Act of 2009. Notification, 45 days in advance for changes. Interest rates, no increases in the first year. Say student cards, age 21 or older or less than age 21 needs a cosigner. Let's see, over the limit fees, only if you opt in for that. These have changed the credit card world a bit and added more fairness to the process, but even though this has helped, it's still important to look at every single credit card that you're considering and shop around. Make sure you're understanding how to read all that fine print and then do match them up against each other so that what you're getting and applying for is right for you. It's right for how you plan to maintain it and manage it to build that credit report and credit score. Watch out for the fine print, obviously. Watch for late payment fees and over the limit fees, any balance transfer fees, any replacement card fees if you lose it, and any cash advance fees. So how to find the best loan for you. You want to look at some of the steps for obtaining possibly a personal loan. Calculate how much you're going to need. Check your credit report and score, which you're already going to do because you're going to get all those reports now over the course of a year. Shop for rates and requirements from your credit union or your financial institution. Ask about interest rates, and then you're going to pick your best option. So the dangers of excessive debt, kind of as we get to the end of this, you definitely want to look and see some of these just to avoid credit troubles. And that's really going to start with self-discipline. Understanding credit in the first place is going to help you make better financial decisions. So here's some simple ways to avoid excessive debt with your credit based on kind of what we've looked at. Also maybe think about other ways that you can avoid excessive debt. But you want to be aware of the warning signs. You want to save money. I can't stress enough an emergency fund. If it seems overwhelming to look at the standard 3 to 6 months, at least have a month so that you have something in place so that you can avoid any financial mistakes in the first place. What you also want to watch out for is steer clear of any ad that claims to erase your bad credit history, because you're not going to be able to erase it. There may be able to temporarily hide negative info on your report, but be prepared for it to show up again. Negative but accurate info is going to stay on your credit report for up to 7 years. You want to steer clear of rent-to-own stores, because these agreements typically result in payments that total 2 to 3 more times than that item is probably worth. You want to steer clear of payday loans because they're expensive, short-term loans that are against your next paycheck with annualized interest rates that they could be more than 700%. And many people wind up renewing these loans with additional fees each time, resulting in just a cycle of debt that's so difficult to break. So we certainly, our credit union as well as others and institutions have loan options that certainly can help you over something than a payday loan. Consolidating all your debts into one high interest loan, that may streamline your payments, but the higher interest rate in exchange for that one payment means you're paying more than you were before. So do check with us first and ask about our rates. Keep in mind that some debt consolidation companies may seem helpful, but it's really only going to prolong your debt and cause more damage to your credit score. Avoiding excessive debt is going to depend on your self-help and willingness to work with creditors, and above all, you want to keep yourself educated with info like we've covered here, and certainly any more info on this can be available at the branches or on our website at azcentralcu.org, or again, go to your own financial institution and reach out. But you want to focus on staying out of debt, certainly the self-discipline, the working with creditors, and continuing to educate yourself. And remember that we are here for you. Again, we have 2 locations. We have 10 around the state, and we are part of a shared branching network, meaning you could travel within the state and within the U.S. If they are part of the shared branching network as well and not incur any fees on basic things like deposits, withdrawals, and loan payments. So thank you for your time. I appreciate that. And again, Katie can certainly get you my contact information if you have questions, or either of the branches at Woodlands and West Street are here to help you.